You're listening to certified financial planner Doug Goldstein, host of the Goldstein on Gelt Show, www.goldsteinongelt.com.
Okay, I'm very excited to have on the Goldstein on Gelt Show Andrew Vonnegut, who is the author of Inside the Global Economy, which is a very new book that just came out, and he also teaches global economics. One of the things that Andrew talks about is this concept of disruptions in the global economy. Some people think of disruptions like major issues, but I actually think there are a lot of subtleties to what goes on in the global economy. And frankly, a lot of people wonder, why do they really need to care about this? And maybe, Andrew, maybe we could just start with that. Why are these disruptions in the global economy important to people who are just long-term investors?
Well, probably the simplest answer to that is that, because they happen. And in fact, most of what happens in the global economy that's of interest to any investor are types of disruptions or discontinuities that are not just a simple follow-on from what happened the day before, the week before, the month before. And so anybody that's investing over the long term, which most people should be, people shouldn't be so concerned about little fluctuations in the market, but anybody who's investing over the long term really should be concerned about major shifts that can happen. And anybody in their 20s, 30s, or 40s that's looking towards retirement is in fact investing over the long term, and they should be more concerned about broad trends rather than what's happening just on a daily basis in the market.
Okay, let's break this down to some real definitions. When you talk about shifts in the market that people should worry about, what do you mean?
Well, I'll use two terms that I use in my book. One is discontinuities, and discontinuities are these things that we refer to also as like these black swan events. These just crazy things that come out of nowhere and just kind of smack you in your portfolio. And by definition, these are the unknowable unknowns that you have a really hard. It's almost impossible to try to figure out what those are. But
these would be things like war, or these would be things like a real estate crash.
These would be wars, a real estate crash that the large part of the market does not anticipate. And certainly at any crash, you always find out about people beforehand that figured it out, but most people basically don't. And that's just a unfortunate reality of it. And so these are these major disruptions that you have a very difficult, if not impossible, time really knowing when they're going to happen. Now, there are ways that you can try to bulletproof your portfolio to them, but those also affect your returns. The second thing are the disruptions, and these are longer term trends that are sitting out there in the global economy that will drive large changes in the economy over time. And these are things that we know about, but we don't know how they're going to affect our portfolio. But we do need to think about those and try to come up with ways to be defensive against them or possibly take advantage of them. The main disruptions that I talk about are demographic trends, both the increase in global population and the slowing down of the population trends. Ecological change, which includes climate change, but also depletion of fisheries and species extinction and other ecologically related events. And then the other ones that I look at are the emerging markets growth, inequality trends, and technological change. And these are all very broad, and it's very difficult to understand how these trends that are actually occurring right now are going to bump into the overall trends in the global economy. But I think it's worth trying to understand those when you're thinking about a 20, 30, 40-year time frame.
I think the biggest trend that I think about that really has changed things would be the internet, because business has just so radically changed as a result. And I would think it's fair to say that business looks different today from how it looked 30 years ago. But are there other such major changes, even if we talk about things like self-driving cars, which really could be a game changer? Is that something that is fundamentally going to change what investing is all about, like the internet did?
Well, I think there are a couple of people talk a lot about AI and robotics, and I think those are two areas that are definitely worth looking at. I think the world could look very different in 20, 30 years as a result of these technologies in the same way that looks different now than it did 30 years ago. People blame trade trends, for example, on loss of manufacturing jobs, but in fact, about 80% of all the loss in manufacturing jobs has come about through technology. And that, if anything, is accelerating. And it's not just how these technologies play into manufacturing jobs, but how the loss of those jobs and the creation of other jobs affect politics, which then affects economics and affects global events.
We're speaking with Andrew Vonnegut, who teaches global economics at the University of California at Santa Barbara. He also wrote a book called Inside the Global Economy. Andrew, I want to dig into something you're talking about, which is this loss of manufacturing jobs because of technology, which really could be a major disruption in the world. I kind of feel that sort of change is something that over time happens, right? For example, in the United States over 100 years ago, probably 90 or 95% of all work done was agricultural, and now it's probably about 2 or 3%. And the market has been able to absorb these changes without really getting a lot of politics involved. Do you think it's going to be possible for people who are losing their current jobs as a result of technology, artificial intelligence, robotics, for the markets to be able to develop a new place for these people? Or is this just the end of work as we know it?
Well, I think that the Luddites have been talking about how technological change is going to throw people out of work for centuries now. And so far, it hasn't happened. And in fact, most likely it won't happen to the degree that the most concerned people are worried about. However, what does seem to be happening is that the rate of change is accelerating. So whereas previous changes from job type to job type happened over generations or half generations, people's ability to both adjust their work, but also adjust their portfolios to changing technological conditions, I think that's going to accelerate. And so we have to be a little bit more on our toes. I don't think we're heading to that sort of Luddite nightmare where everybody's going to be out of work, but certainly the nature of work is going to be changing, and the nature of our portfolios may need to change as well.
So let's bring the conversation now to something a little practical as we're wrapping up, to see if we can give people some ideas of what they should be thinking about when they are investing, given these types of disruptions and discontinuities that they are seeing already and that will probably accelerate, as you're saying. Someone who wants to develop a long-term portfolio, but to consider those facts and build them into the portfolio, what should he be thinking about?
Most people try to focus on trying to understand what the technology is going to be in the future and try to make bets on those technologies. And certainly the news is full of stories, or people in conversations are full of stories of people who bet early on Google or one of the other main companies. But I think one of the best strategies for investing over the long term is certainly to try to be a little bit more defensive about it. Instead of trying to focus on who the winners are and possibly investing a lot of money in a bunch of stocks that are bound to be delisted, is to try to figure out who's positioned to survive rather than just thrive. Anybody who's looking at a 20, 30, 40-year time frame for their investments, again, shouldn't be looking to try to find out what the hot stock next year is going to be, but how to survive over the next 10 or 20 years. It's that long-term capital accumulation and not getting blindsided by a new technology that's more important than trying to identify what that new technology is.
So if someone had thought about that, used that model, let's say 30 years ago, what kind of companies would he have bought, right? He would have bought, medical care companies or, pharmaceuticals, something, drink, beverages. Is that the space? Because everyone always seems to drink, although that also seems to be changing.
Yeah, 20 or 30 years ago, as the internet was taking off, it's as hard to forecast then as it is now. But, I'd be certainly looking at not as much as getting into companies that are going to be further affected by virtualization and AI, anything that's heavy. For example, retail was one of those great calls that it was going to get decimated by the internet, and it finally did. Now, the time frame on those can be difficult to forecast, but if you're looking at a 10, 20-year time frame, you probably don't want to be getting into retail, traditional retail, for example. And so a big part of the challenge is trying to figure out what those losing industries might look like, might be.
Right. And look at the ones that just people will continue to need all the time. I think that's a smart way to invest at any point in history. And that's certainly for the core portfolio is the way that people should really focus. And then for the satellite portfolio where they're taking more risk and looking to, swing for the bleachers, fine. If there's a technology you like and you want to invest in that with money that you realize is much more high risk, that might be a place to go. Andrew, this has really been fascinating. Unfortunately, we are just about out of time, but tell me in the last few seconds, how can people follow you and follow your work?
I have a website. It's Wolandia.com, which is named after my favorite demon from one of my favorite books, Master and Margarita. And a lot of the stuff that I write about is trying to avoid the kinds of risks that could potentially come up in the future, rather than try to identify the kinds of investments that'll make you rich.
Okay, so if we direct people there, they can find out about you and find out about your book as well?
That's correct, yeah. And it's still, like any blog and website, it's a work in progress. And as new ideas come up, I put them out there, and I'm always looking for people to comment.
Fantastic. We will put a link to that at the show notes of today's show at goldsteinongelt.com. Andrew Vonnegut, thanks so much for taking the time.
Thank you very much. I really appreciate being here with you.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Check out all of Doug's money ideas at goldsteinongelt.com. Doug specializes in helping people who live outside the United States handle their U.S. investment accounts. If you have a question that you would like answered on the air or off, contact Doug at his website, or send him an email to doug@profile-financial.com.